Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning, welcome to the Forex Daily video research. Today the 29th of September, and today we will talk about the Japanese yen. I know, guys, that you don't like very much my choosing of futures charts of JPY USD, so I decided to use the MetaTrader 4 platform today for USDJPY rather analysis. Well, this analysis will be mostly educational, but not quite educational, because there are some very interesting moments, and they will be particularly interesting for the positional traders. Okay, let's start from the monthly chart of Japanese yen. Monthly trend is bearish based on exponential MACD. So look at this pattern that is forming right now. A, B, C tap. Market has hit 618 expansion and moved below it. Also look at this CD leg. This is the cloned line, so I just cloned the speed of AB leg, and you can see how harmonic they are. So the speed of CD leg is quite identical, absolutely harmonic to the AB. This is very good for possible reversal in the D point when the market will reach 100% expansion of some traders call this pattern as ABCD buy, because when market creates a harmonic retracement to the downside, very often the D point creates a solid support in our case to the further move down of the market. Also, there are a couple of nuances right here. First of all, look at this swing from this low to this high. Market hit 50% retracement, retraced 618, retraced 618 again, retraced 78.6, 88, and now market has broken down the last Fibonacci support, deep Fibonacci support, 88% retracement from this low to this high. This is very bearish sign for the USD, so I can't exclude that market will take out these lows, if of course Bank of Japan will allow to do that. Anyway, the third moment is, look at this, the D point around 78.37, and it's just below the previous highs. So can you imagine how much stops has been placed just below this area of support, and the target is below it. So if market will reach the D point, 100% expansion from this ABCD move, it will trigger the stops just below this low and accelerate the move to the downside. So I can exclude that market during this possible move during the short period of time can reach even 127 expansion around 75. Well, it will be just that, like a shadow on the monthly chart, I suppose. Hit stops just below the lows and returns back. Some kind of ocean rinse, if you may call that. But this is very long-term perspective, just very interesting moments from the educational point of view and from the positional traders. So if you would like to enter on the long side of the market on the long-term period, take care about these lows and that this target is below these lows. So be prepared for possible fast move to the downside and return back. Okay, now let's shift to the weekly chart. This is the weekly chart of the Japanese yen. A very interesting moment also exists here. This is green line is the 3x3 moving average. So this is the 3-period moving average shifted forward for 3 periods. Look at this, we have solid thrust to the downside, close above the 3x3, close below. Also in this yellow rectangle, this is the MACD predictive failure pattern. I do not have it on this chart, but on my CQG software there was a MACD predictive failure. So trend during this bar shift to the bullish in the beginning of the week, but at the end of the week market didn't confirm that, and you can see on the MACD, simple MACD, that trend is still bearish. So when this has happened, usually it leads to the previous lows, and this is the very good sign that the previous lows could be taken out by the price. So this is the potential for the USDJPY double repo pattern, especially if market, and I expect that market should create the new lows, taking out these previous lows before it will cross above the green line again. So just want to remind you that USDJPY double repo needs solid thrust to the downside, close above the 3x3, close below, and then close above. When the weekly chart, weekly bar will close above the 3x3, this is the confirmation of the pattern, and we can expect some solid move to the upside. Well, I can't exclude that this second penetration of 3x3 could be due to new Bank of Japan intervention. So like this intervention, market close above the 3x3, so market presses to the downside, just hit new lows, and then will be may occur another intervention that leads market to the upside and close above the 3x3. So this could be very interesting pattern in nearest weeks. If we will not get the close above the 3x3, this will not be the double repo. Okay, so this is also interesting situation right now on the weekly chart. Let's shift to the daily chart. This is the daily chart. This trend is bearish, but it's not big deal right now. Look at this. This is strong intervention bar, daily bar, and market erased all the Fibonacci, meaningful strong Fibonacci supports without any bounce. 382, 50%. Here's some small bounce, but not solid. 618. Okay, there are just two last levels for the last gasp for the bulls, if you like to call that, 786 and 88. Well, in general we can't exclude some possible support at 88 and returns back, some kind of butterfly possible to the butterfly to the downside with the target somewhere around below the 82. But the monthly scenario of the double repo and the possible MACD failure on the weekly chart makes me think that market can erase the previous lows. This is a very bearish sign when the market has shown strong thrust to the upside, and then this thrust totally erased by the price action. Well, the main support from the thrust bar is just below these lows. Also there are a lot of stop orders just below it, so I suppose that market can, and the probability suggests that it should take out these lows, then possibly the Bank of Japan can intervene again. Well, this is that I'm personally waiting on the Japanese yen from the positional guide of trading on the weekly and daily time frames.